With me now is Edmund Lee of Caylum Trading Institute joining us here in the studio. Good to see you, Edmund. Thank you so much for joining us.
Kathy, morning.
Right, so how are you taking this all in? Trump's biggest salvo against China. We got banks either cutting rates or keeping them on hold, as we have. How are you chasing alpha?
You know, 2 years ago, this was a biggest question mark for us, right? We saw high inflation, high interest rates, and I think everybody was discounting how long this would actually be taking, right? Ever since the rate cut cycle that started last year, everybody thought, okay, it's time, right? That's the reason why we've seen a huge foreign inflow come in the entire emerging market, maybe third quarter last year. And all of a sudden, Trump administration winning, everything reversed in the fourth quarter. Until today, we're still seeing foreign selling in the first quarter. You know, our opinion has not changed in the market. Yes, we understand markets are cheap. And if you're asking me from an investing standpoint, I really do believe this is a great opportunity. You want to be buying yielding assets. So for example, whether it's in bonds or equity, I think that has been our number one trade. So if you're buying equity, make sure you're buying something that gets you paid to wait.
Yeah, but where? I mean, you've got your CTS Global Fund that's invested in the S&P 500 index and also benchmarked against a PSEI. So where do we pick and choose?
If you're asking me from a pure alpha standpoint, our focus has still been outside. And I'll explain why in a bit. Because everybody explains that things are expensive, especially with regards to S&P 500. And that may be true, right? But if you look at it in terms of EPS growth, 13% EPS growth is still coming from your Mag 7 and in fact the S&P, right? So do you pay more for growth or do you pay less, which is 9 times PE for the Philippines? But again, growth is still uncertain. And so in our opinion, focus is still outside, but don't get me wrong, we're still seeing pockets of opportunity happen in the Philippines. And there are some sectors that we like, especially the consumer sector. I think people did not expect such a downgrade or derating that happened in the consumer sector. It's actually not in the Philippines. It's entire ASEAN. So ASEAN, you're probably looking at 13, 14 times PE for 2025 and maybe 12 times for next year. So there are select companies in the consumer sector that we like. So for example, like URC today, still paying you at 5.8 to 6% cash dividend. I think the derating that happened in URC is overblown in our opinion. So we think that this is actually a great time for you to start picking up shares, especially with the rebalancing that's coming up this Friday. Aside from that, other consumer stocks that we like, DNL, we think the Batangas Plan CapEx is pretty much over. Yes, there is still some ramping up, and that's the reason why there's still some level of skepticism that's happening. But nonetheless, we think that how people have been downstreaming their consumer spending patterns, meaning instead of buying 12, 15 pesos, they're cutting it down to 8 and 9 alternatives. I think DNL has actually been positioned well in that segment.
All right. Well, thank you so much for those stock picks. We'll be monitoring that from a market standpoint. Thanks. Edmund Lee of Caylum Institute joining us.
Thank you.